Hello. What a beginning of the month April has been. Complete and total market volatility chaos that has been a whirlwind of speculation and losses. I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading or simply algo trading. We're looking at my live accounts right now on Oanda. And even I took a few losses over the last couple of days. April 3rd, in fact, I took roughly $75 worth of losses, 5 stop losses. I'm still here and my account is still stable thanks to my worst case scenario planning. But not all of my demo accounts survived. And we're going to get into that very shortly. For now, though, let's just talk about this market. Talk about crazy. And we can really see it on the chart, and as we look at the various parts. These huge green candles really drive home just how far the market has pushed for the Euro USD. As the market pushes up through these volatile levels, millions upon millions of dollars were lost over the last couple of days. The irony of it is, from the 31st until about a couple of days ago, I was so sick I couldn't even pick my head up out of bed. So here I have real money in the market, my real money, and I could do nothing about it. I had no idea what was going on in the market. And at that point in time, I really couldn't have cared. I was just too sick to care. The worst illness I've had in 30 years. And yet, thanks to worst case scenario planning, thanks to always being paranoid about the market going against me, it paid off and my account survived. Yes, I took some stop losses. It set me back to about mid-February or so in terms of my balance. But that is nothing. That is minor. I will easily be able to keep, or should say, be able to generate new revenue and continue progressing. That really is one of the hallmarks, one of the most critical standpoints of any successful trading approach. Being able to continue even when the market is just a nightmare. So let's go look at the equity chart and talk about that. Okay, looking at the cherry blossom equity chart, we can clearly see my stop losses. It's painful. It hurt to take them. Waking up on the 4th and finding out what the state of my account was in was definitely not something I was looking forward to. But the fact that I still had my account made me real happy, especially after I started reading the news and catching up to just how bad the market was on the 3rd. And I think the most recent estimates by Bloomberg was $126 million lost on just the 3rd alone from liquidations. That's a pretty significant market movement. So I'm happy. I have my account. I can keep trading. And in fact, as we look at the close-up of this, we can already see the account recovery process is beginning. the slow, steady approach of being able to build the account back from the $75 I've lost has already started. So I'm real happy about how well that worked. Okay, let's try that again. See if I can zoom into just this part. There's our stop loss and our recovery. Nice and simple. So we have a stable point of reference. And as you can see from the dollar amounts, we're actually doing pretty good for recovery. A lot better than I really would have expected, considering that this is strictly a passive approach and the market being in such a state it's in. The overall framing of this entire market has been a hot mess, really. The volatility is not something to underestimate. This market dished out some punishment. So preparing for it really saved the account. However, that isn't true of all of my accounts. And in fact, one of my accounts, finally, after what took a year of preparation trying to get everything right, finally displayed the one thing that I wanted to demonstrate. So let's go look at the Brainstorm account and talk about it, because it really is the true story behind this market, and it demonstrates one of the most critical principles that exists in trading. So let's go check that out. Okay, here we are looking at Brainstorm. This account was hard to set up in order to get it to really demonstrate the one thing I wanted to demonstrate the most. It was difficult because I had to make sure everything was set perfect. Perfect risk management, perfect position size, perfect account size. Everything lined up as much as I could, except one single element, in order to demonstrate just how strong, how powerful that element is and the consequences of it. This account took a beating on the 3rd. Now, if you remember the last video I talked about this account, we were up $8,000. We had a balance of $58,000 in this account. Let's see where that balance is right now. We have a balance of $48,000. That's right. The account lost $10,000. It got hit brutally. It got punished by this candle. This candle just beat the hell out of the account. But the truth is, really, it isn't just that one single candle. See, this account was set up to fail because it did the one thing that always ruins every single trader. It overtraded. One of the biggest issues in trading is overtrading, and trying to demonstrate that, and only that principle, without position size, without margin calls, without liquidations, the kind of stuff that would make it difficult to actually see was actually quite challenging. In fact, I really expected this account to blow up sooner than what it did. I'm actually surprised that it took as long as it did. But the point being, the underlying principle is the account wasn't set up to weather market changes very well. Now, the account had 237 levels, but what made that stand out is that it only bought in deviations of 2 pips. That's right, 2 pips is all that is in between these layers. So at 237 layers, 2 pips at best is just less than 500 pips total. The average market movement in a single month is 500 pips, or roughly thereabouts. I think last month it was in the 480s to 490s. So it was over trading, or trading too aggressively, or hyper trading. Whatever word you want to best use to describe putting in too many trades at once and not giving enough space between those trades. It wasn't taking into account volatility. It was just hammering those trades out. But it generated $8,000. It worked until it didn't. And then all of its earnings it gave back, and then a little more. This is the death note to anybody in trading that overtrades. Sooner or later, the market is going to have a major paradigm move. Something's going to happen, and it's just going to push against you in a way that is going to be absolutely unforgiving and brutal. Very brutal, as we see. So it's important to understand that you have to trade reasonably sensible. 2 pip deviations is not reasonable. In order to weather a market of that magnitude, you need to be able to sustain 2,000 or 3,000 trades simultaneously. And that's just not realistic or really responsible. It's important that you don't overtrade. It's important that you stay within what the market will tolerate. For example, 5 to 10 pips. If you know your market has a monthly movement pattern of 500 pips, then you need to make sure you can withstand at least 2 times that. Meaning your market must be able to float 1,000 pips if you know your market average is 500 pips. It's not going to stop losses, as I demonstrated through Cherry Blossom, but it does help you weather extreme situations, like what we saw on April 3rd. So let's actually go look at the equity curve for Brainstorm and see just how bad it really is. Okay, here it is. The wall of disappointment. The absolute cliff of oblivion. The agony of overtrading. The point by which you begin to question a lot of life choices. This is the kind of situation that a lot of traders face because they've over-leveraged the account through aggressive trading. The beauty of trading is it is a wonderful hobby. It runs great, and being aggressive works until it doesn't. And that is the problem. You can have a perfect strategy. You could have the perfect position size. You could have the perfect risk management techniques, reduction, targeted stop losses, trailing stop losses, countless numbers of methods you can use to help protect your account. But if you're over trading, none of it matters, because sooner or later, the market is going to move. And when it does, your genius brainstorm of an account is going to have a brain aneurysm and do exactly what we see on the screen. The equity curve is just going to collapse. Now, you can already see that the account is recovering because of the technique. The technique works. So this isn't a failure of the technique. This is a clear example of just over trading. And that really is the second point I think stands out the most in terms of this entire process. A lot of people have good algorithms, good approaches, but because they're trading too aggressively, their approaches are going to fail. This balancing act is incredibly difficult. Try to figure out how and when to trade is difficult. Remember, if it was easy, everybody would be trading and everybody would be making money. Or it would be so illegal, nobody could do it because everybody would be making money. Trading is difficult. Even the most seasoned experts struggle trying to find the best way to get in, out, or just mitigating insane levels of volatility like what we've seen. So as we watch the market unfold more, and we see things like this unending level of a cliff for people just caught by the market, over trading, overextended, over leveraged, it's going to claim more victims. Trading is about your mindset. This demonstration took me a year to try to make sure I had everything perfect. Sadly, though, the longer these kind of situations run for people with real money in the market, the more devastating these kinds of losses are. Now imagine had this been real money. Real money. Picture the psychological impact of somebody believing they had the perfect strategy. And it really is a perfect strategy. The strategy itself works brilliantly. And then to wake up and see this on their charts. To see $10,000 missing from their account. It's devastating. To underscore risk mitigation is really, it doesn't go far enough. It doesn't speak to the very nature of just how unpredictable the market is, of just how volatile the market is, of just how competitive the market is. It really is a bloodbath in a lot of regards. And anytime it's you against any other trader in the market, realistically, you're going to have situations of losses. Now, this account will recover, and we can already see that very side effect way at the bottom. We can already see that it is doing just that. It's going to take time to recover. It's going to be a painful recovery, but overall, it is really recovering. The biggest issues about trading isn't really the losses. You can't avoid losses. My own personal money count is down $75. It stings. I went from 1586 to 1509 very quickly. But I kept most of my balance through worst case scenario planning. And really, I wish I could say I did it, but I didn't. I was laying in bed sick that day, just hoping the world would cover me up and go away. My bot did everything to protect my equity because I was just too far out of it to even know what was going on. I cannot underscore worst case scenario planning enough. Before you put a single penny down into the market, you must think about the worst case situation possible. And that really is what happens when things just go south uncontrollably. And it's easy to say just turn the bot off. But if you're stuck in bed sick, or countless of other situations in the real world where you just can't get to the machine, all you can do is just hope everything you put in place plays out. As much as it's easy to say that mathematics is the driving force of the algorithm, the certain truth behind it is that a lot of it really is just luck. Share your thoughts. Let me know what you think about April 3rd. How did it affect your trading? Did you lose any money? Did you make money? Or did you just sit the day out? Perhaps you got lucky and didn't have any trading at all. Let me know. Share your thoughts. Leave a comment. If you like this video, please give it a thumbs up and help me grow the channel. Help me get out this kind of information to other people so they can learn to trade the real way. Thank you for watching, and until next time.